Hey there, fellow investors. Today I'm excited to break down my definitive ranking of the best Canadian ETFs that should be on your radar in 2025. Whether you're just starting your investment journey or you're a seasoned pro looking to optimize your portfolio, this tier list will help you make informed decisions. Let's kick things off with our S-tier ETFs, the absolute cream of the crop. At the top of the mountain sits VFV, Vanguard's S&P 500 Index ETF. This powerhouse gives you exposure to the 500 largest U.S. companies with a rock-bottom MER of just 0.08%. The beauty of VFV is its simplicity and effectiveness. You're essentially owning a piece of the American economy. Right alongside VFV in the S tier is XIC, the iShares Core S&P TSX Capped Composite Index ETF. If you want broad exposure to the Canadian market, this is your go-to option. With over 230 Canadian companies and a low MER of 0.06%, it's hard to beat for homegrown diversification. Moving down to our A tier, we've got XEC, the iShares Core MSCI Emerging Markets ETF. This one's particularly interesting because it gives you access to high-growth potential markets like China, India, and Brazil. While it comes with slightly higher volatility, the growth potential makes it a fantastic portfolio diversifier. Now, what makes these top-tier ETFs stand out? First, it's their track record of consistent performance. VFV, for instance, has delivered an average annual return of around 10% over the past decade. Second, they all feature low management fees, which means more of your money stays invested rather than going to fund managers. Let's talk about our B-tier options. These are still solid choices, just not quite as compelling as our top picks. Here you'll find ETFs like ZLB, BMO's Low Volatility Canadian Equity ETF. It's great for more conservative investors, but you might be leaving some potential returns on the table. One important factor to consider is your investment timeline. If you're young and have decades until retirement, those S-tier options might be perfect for you. However, if you're closer to retirement, mixing in some B-tier low-volatility ETFs could help protect your wealth. Let's talk about diversification strategy. A well-balanced portfolio might include 40% in VFV for U.S. exposure, 30% in XIC for Canadian market coverage, 20% in XEC for emerging market growth, and 10% in a B-tier ETF for added stability. Remember, while past performance doesn't guarantee future results, these ETFs have proven themselves through various market conditions. They've weathered market storms and come out stronger, which is exactly what you want in your long-term investment strategy. Before we wrap up, here's a pro tip. Consider dollar cost averaging into these ETFs rather than investing a lump sum. This strategy helps reduce the impact of market volatility and can lead to better long-term results. There you have it, your comprehensive guide to the best Canadian ETFs for 2025. Which ETF is your favorite, or do you have a hidden gem? Drop it in the